You know, in India, Reliance Industries isn't just some company. It's a flat-out empire. I mean, it touches pretty much every part of daily life. But here's the thing. Behind all those big headlines, there's a really interesting, kind of contradictory story playing out. So let's dive right in. And that really brings us to the big question, right? If Reliance is this absolute behemoth, India's biggest company, then why has its stock been, well, kind of underperforming? It's a paradox, and honestly, it's got a lot of investors scratching their heads.
All right, so we're going to dig into this paradox. We're going to put Reliance through a pretty serious financial health check, to really understand what's causing this gap between its huge size and its, frankly, sluggish stock.
Okay, let's just start with the hard numbers. Not too long ago, the stock took an 8% hit. Now, yeah, it's bounced back a little, but a drop like that tells you there's a whole mix of things going on here, from global tensions to pressures right inside the company itself.
So to really get to the bottom of this, we need a solid framework, a system, and that's why we're going to use the CAN-SLIM framework. It's a tried-and-true 7-point inspection specifically for growth stocks. We're going to break it down letter by letter and see what it tells us. Now, if you're not familiar with it, CAN-SLIM is this really powerful system developed by the legendary investor William O'Neill. It's basically designed to hunt for companies that have explosive growth potential. So yeah, it's the perfect lens to look at Reliance through.
Okay, first up is C for current earnings. And right away, this is where things get really interesting. You see this huge gap. Revenue, it's growing at a pretty healthy 11%, but the net profit growth, it's basically flat, almost zero. A strict CAN-SLIM investor wants to see over 20% profit growth, so this is an immediate yellow flag. All right, next is A for annual earnings. Now, the picture here is a bit more stable. You've got consistent revenue growth, which is good, but its return on equity, or ROE, which is just a fancy way of saying how well it turns money into more money, is hanging around 9%. I mean, that's solid, but it's way below the 17% benchmark you'd want to see for a real high-growth superstar.
Now we get to N for new catalysts. And honestly, this is where the story gets really exciting. I mean, Reliance is making some huge moves here. They're streamlining their entire green energy business, they're targeting massive solar capacity, planning these enormous AI-ready data centers, and of course, the big one, the super anticipated IPO for Geo. This is all about what's coming next.
So, the big question is, does the big money believe in this future? Well, that brings us to I for institutional sponsorship, and the answer is a massive yes. We're talking top-tier credit ratings. And look at this. Almost 30% of the company is owned by foreign institutions and mutual funds. It's pretty clear the smart money has already placed its bets.
But, and this is a big but, here's the twist. L stands for leader or laggard. And right now, based purely on its price action, the stock is a laggard. There's no other way to put it. It's trading below its 50-day and 200-day moving averages. Those are key signals for momentum. And right now, they're telling us it is definitely not leading the market.
So what do we got? On one hand, you have these strong fundamentals, but on the other, you've got this really weak momentum. How do you make sense of that? Well, let's put all the pieces together and look at the final scorecard from our 7-point inspection.
And man, this scorecard just perfectly captures the paradox we've been talking about. Just look at this mix. You've got these shiny gold stars for its new catalysts and institutional support, solid green checks for annual growth, but then bam! You see that big red X for being a laggard and those yellow caution flags for its stalled earnings and the overall market direction. It's a real mixed bag.
And this is the crucial part. This data can lead you to two totally different conclusions. So, a strict growth investor, someone who lives and dies by the CAN-SLIM rules, they'd probably look at this and say, it's a hold. I'm going to wait for the momentum to come back. But a more value-focused investor, they might see this exact moment, this dip in the price, as the perfect time to get in before all those future catalysts really kick in and ignite the stock.
Okay, so let's zoom in on that future potential. What exactly are these catalysts on the horizon? The things that could actually reignite growth and completely change the story for Reliance. First off, you can't forget the legacy business. The diesel refining margins, what they call crack spreads, have been surging, hitting as high as $42 a barrel. That's a huge profit driver for their oil-to-chemicals business, and really, it acts like a giant cash machine that funds everything else they're doing. And then, of course, there's Geo. We're talking a staggering 250 million 5G subscribers. This digital empire isn't just a side project. It's the company's most profitable segment, and the scale is just absolutely immense.
And you can't ignore the physical side of things either. Nearly 20,000 retail stores spread across the country. Now sure, expanding that fast puts a squeeze on profits in the short term, but it's a long-term play. It's about dominating one of the biggest consumer markets on the planet. But here's what might be the biggest catalyst of all, the new energy timeline. And listen, these aren't just some vague promises for the distant future. We are talking about concrete milestones happening this year. We're talking about launching massive solar and battery gigafactories, capitalizing on some unique opportunities in the energy market. This is their pivot to the next big thing, and it's happening right now.
Okay, but what about that Geo IPO? We all know it's been delayed, but this detail is absolutely critical. The analysis suggests the holdup isn't because of a problem inside Reliance. It's because of external regulatory stuff. And for an investor, that is a huge difference.
So, we've looked at the weak stock momentum, the super strong fundamentals, and these massive catalysts just sitting there on the horizon. So, what's the final takeaway? What does it all mean?
Really, it all boils down to this one single question. Is Reliance Industries a sleeping giant that's just consolidating its power, getting ready to reawaken with incredible force? Or is it a heavyweight whose own massive size is finally starting to slow it down? The answer to that question is going to be one of the biggest investment stories to watch in the years ahead.